Recession to last until spring of 2024? Elon Musk. Elon Musk, the CEO and founder of Tesla, believes that the global economic downturn could continue for another 18 months. The world's richest man and mercurial electric car executive suggested that the recession might last until spring of 24 in a conversation on Twitter. Welcome back everyone. In today's video, we'll discuss what Elon Musk says about the recession. Don't forget to subscribe to our channel. The comments were made in response to a tweet by Billy Marcus, a co-creator of Dogecoin, known online as Shibetoshi Nakamoto, who noted that coronavirus numbers are actually pretty low at the moment. I guess all we have to worry about now is the impending global recession and nuclear apocalypse. It sure would be nice to have 1 year without a horrible global event, Musk replied. When asked how long he believed the recession would persist by Tesla owner Silicon Valley, a Twitter account with over 600,000 followers, Musk responded, "Just guessing, but probably until spring of 24. The International Monetary Fund projects that the global GDP will slow to 3.2% this year and 2.7% in 2023 from its 2021 rate of growth of 6%. Except for the 2008 financial crisis and the temporary decline during these early stages of the COVID epidemic. That would represent the slowest growth rate since 2001. According to the Federal Reserve, the US GDP is expected to rise by just 0.2% this year and 1.2% in 2023. Musk is the newest business mogul to voice concerns about the state of the economy. Jeff Bezos, the founder of Amazon, warned in a tweet on Wednesday that it's time to batten down the hatches in anticipation of choppy economic conditions. The tweet was sent along with a video of Goldman Sachs CEO David Solomon saying in an interview with CNBC that he believes there is a good likelihood that the United States will experience a recession. Jamie Dimon, the CEO of JP Morgan Chase, has also issued warnings about impending economic turmoil. In addition, Musk's remark came after Tesla stock had a difficult week after the automaker missed revenue projections and issued a warning about a likely delivery shortage this year. Musk voiced greater optimism for the American economy than other economies on the analyst call. He also mentioned how rising interest rates are impacting the economy. The US actually is in. North America's in pretty good health, he said. A little bit of that is raising interest rates more than they should, but I think they'll eventually realize that and bring back down, I think. However, he said China is in quite a burst of a recession of sorts, driven by the real estate market, while Europe has a recession of sorts, driven by energy. Markets worldwide are flashing warning signs that the world economy is perilously close to collapse. A recession is now a matter of when, not if. As markets struggle to accept the certainty that the Federal Reserve will continue its most aggressive monetary tightening campaign in decades to squeeze inflation out of the US economy over the past week, the pulse of those are flashing red lights intensified, even if doing so brings on a recession, and even if it comes at the expense of clients and companies outside the US. According to research firm Ned Davis, there is currently a 98% risk of a worldwide recession, which adds some somber historical legitimacy to the discussion. The only times the company's recession likelihood reading has been this high were in 2008 and 2020. For most of the epidemic era, the business has been growing across all industries, despite record high inflation eating into earnings. That is due, again, to the perseverance of American consumers, as companies can pass on the majority of their higher expenses to customers to maintain profit margins. The earnings boom, though, might not persist. In the middle of September, investors received a shock from one company whose performance acts as a sort of economic barometer. In an unexpected revision to its estimate, FedEx, which has operations in more than 200 countries, warned that demand was weakening and that earnings were projected to fall more than 40%. If anyone needs another awful historical comparison, equities are now on course for their worst year since 2008, and Wall Street has been dealt a whiplash. However, things were completely different last year, thanks to a flood of cash injected by the Federal Reserve. which unleashed a double-barreled monetary easing policy in the spring of 2020 to prevent financial markets from collapsing. Equity markets flourished in 2021, with the S&P 500 rising 27%. The celebration continued into early 2022. However, as inflation took hold, the Fed started to remove the punch bowl, raising interest rates and halting the bond buying program that had supported the market. Although it is generally agreed that a global recession will occur sometime in 2023, neither its severity nor duration can be predicted. Of course, not every recession is as painful as the Great Recession of 2007 to 2009, but they are all painful. Some economies will be able to withstand the blow better than others, especially the United States, with its robust labor market and resilient consumers. That's all for this video. We'll be back soon with another informative video. Don't forget to like and share this video. Until next time,